watching Investors Guide on ET Now. Thank you for staying with us. Dhirendra Kumar is with us as well in our Delhi studio. It's time for our product review of the week. And this week we're looking at the Fidelity India Special Situations Fund. The reason why we're looking at the fund this week is because in the last 1 year, when most of our equity funds have sort of disappointed us as investors, this fund has done exceptionally well. We're going to find out why, and we'll find out if it's going to continue to do well, which means should we be investing in it. But first, Avan is here to give us an introduction into how this fund operates. Avan.
If you have always wanted to outsmart the market by finding stocks that will make you rich, this might be the fund you're looking for. The Fidelity India Special Situations Fund was launched in April 2006, and as the name suggests, the fund looks for opportunities that might arise when businesses or stocks face special situations like restructuring of a business, a new product launch, or when a stock of a good value is out of favor. Fidelity has a good track record of managing special situation funds globally. But has it managed to do the same in India? The fund has a disappointing year in 2007 when it fell short of its category average by 15%. But since then, it's managed to stay in line with the rest of its category. The fund is witnessing a turnaround this year. Its year-to-date return has been 22% against the Sensex that has returned 13% and the Nifty that grew 14%. So should this fund be a part of your portfolio? Let's find out.
Alright, Avan, thank you so much for giving us those details. Dhirendra, Fidelity India Special Situations Fund. It's a young fund, but it has had an impressive track record. Over the last 1 year, if we compare its year-to-date performance, 23%, this will be a category average of 15%. Would you recommend this as the fund that we should be using in this market?
This is a fund with a lot of conviction, and this fund has historically been very heavy on out-of-favor companies, which are relatively cheap and not necessarily for a brief period of time. So it takes a long-term view on such opportunities which are out of favor, underpriced. What we are seeing year to date in 2011 is just the other side of it, which is the turnaround that we have seen in banking stocks and the selectivity which is reflected in this fund's portfolio, and that has translated into this kind of performance. So I would say this fund has been impressive all through in the past 5-6 years. Only 2007 was a little disappointing. Beyond that, it has been an impressive fund, and yes, right now it is witnessing a big turnaround, but it is still way off from its 2007 highs.
And at 40% invested in mid and small cap, what sort of risk would I be taking on if I invested in this fund right now?
Despite the 40% allocation to mid and small cap, I don't think they are unheard of names. They are not questionable companies. Out of favor company meaning proven companies which for some special situation are out of favor. So they are not the kind of usual mid cap and small cap which could be a concept stock, which could be something where you are betting something big on future. They are not such stories.
Alright, Dhirendra, for that growth benefit in our portfolio, what rating would you give this fund, and would you recommend we invest in it right now?
Now, it's a worthwhile investment, and I would give it a 4-star, which is a risk-adjusted scale as well.
4 stars there for the Fidelity India Special Situations Fund. Dhirendra, they're saying that it is an interesting concept. It might make sense to add it to your portfolio. Let's move on now to our rapid fire hold or sell segment. Raj is listening from Chennai. Dhirendra, he's 37 years old. He has a large family of 9 members each, and this is interesting. They have each bought one fund, and they have a 10-year horizon for all of these funds, and they treat it like a portfolio. Now, he wants to know if this fund selection will give him good returns. First of all, what's your response to this sort of an investment idea where every family member buys one fund?
Not a bad idea. If you are actually choosing good funds and every member has it, then what can I say? I don't think 9 funds are too many, but in one portfolio it just might be little more than usual. But if somebody is investing regularly, 9 members each having one fund, it's an interesting idea.
It's an interesting idea. Now, the interesting part is on this show, we would normally decide based on the time horizon. So, an older person, we'd assume, would have a smaller time horizon, and a younger person would have a larger time horizon. But he hasn't given us that breakup. He told us that all of these funds are for 10 years. So, keeping that in mind, let's go through them. The first on his list is the HDFC Prudence Fund. It's a balanced fund that behaves like an equity fund. Would you recommend he continue investing?
Yes, he should continue investing. It's an excellent balanced fund.
The next on his list is the HDFC Capital Builder. We don't hear this name too often. Would you recommend to continue this investment?
It's a very old fund, and it started as Centurion Quantum or something like that. And over years, it has done reasonably well. But when choosing choosing an equity fund from HDFC family, there are other proven, and there are stalwarts there. They've done much better. If I have to swap this fund with a fund with superior credentials, it will be HDFC equity.
Alright, swapping that one for HDFC equity. ICICI Prudential Focus Blue Chip Equity. I know you are impressed with this fund as well. 10-year horizon, continue investing?
Here is a fund which is focused blue chip, and which means that it has done very well by focusing well. And this could be a very disappointing fund as well given its concentration. So, and it has a limited history. So I would say that yes, it's a good fund, and it's a good fund even now, but you have to review your investments every year, like any other equity investment, and this fund in particular.
The UTI Dividend Yield and the Birla Sun Life Dividend Yield Plus are on his list as well. Continue investing in both of them?
Yes, both are impressive fund, and if there are two dividend yield funds which I have to recommend, then these will be two, and this is a very desirable allocation. And both are good dividend yield funds.
Alright, but keeping in mind the fact that he has written in saying he has emergency cash, he has fixed deposits and savings accounts, so there's nothing there that we need to worry about. He also has the IDFC Small and Mid Cap Equity Fund, Dhirendra. Continue investing?
Yes, this is also an impressive fund, and it has done very well.
Also, would you recommend that the most vigilant person in the family hold this fund because it needs to be tracked on a regular basis?
Yes, I think the oldest member in the family should have the HDFC Prudence, and the most vigilant person should have this IDFC Small and Mid Cap.
Right, the Braveheart holds the mid and small cap. I'm going to take the last three funds together because these all three are impressive funds. They're funds that you regularly recommend on the show. Franklin India Prima Plus, Reliance Equity Opportunities, and Fidelity Equity. Continue investing in all three?
Yes, continue investing in all three. And these are the kind of funds where maybe what I was suggesting, that you should review your investment every year. These are the kind of funds which you should review less periodically, and you'll be okay.
So if you have questions for Dhirendra, remember you can write to us. There's an email ID at the bottom of your screen. Dhirendra, thank you so much for joining us on Investors Guide. We look forward to having you back again next week. On the other side of this break, we'll find out if you can get a term cover if you're a marine engineer who works overseas. Stay tuned.